My guess is that most people think that gold's going to go back down, to 1,500. They never expected it to get to 3,000. They thought 2,000 was the top. So they have no idea why gold is going up. They just assume it's a fluke. But I think, again, the trend is going to be up in the price of gold, even if the uncertainty dissipates and we have some kind of, more a clear view of what's going to happen with tariffs. So I think ultimately, these deals are going to get made in the mining sector because what's happening in the global economy is going to be good for gold because what's happening is bad for the dollar.
Gold rebounded on Friday, trading around $3,262 after a three-day decline triggered by headlines centered on potential tariff easings. Despite this brief correction, the precious metal's long-term trajectory appears firmly upward, supported by fundamental economic factors and significant institutional buying. Prominent economist and gold advocate Peter Schiff maintains that gold prices will continue rising regardless of the resolution of trade uncertainty. According to Schiff, more profound global economic shifts undermining the dollar's strength simultaneously boost gold and drive increased activity in mining sector deals. Analysts at Long Forecast share this bullish outlook, projecting gold reaching $3,661 per troy ounce by mid-2026 and climbing further to $3,910 by year-end. Market experts broadly agree that gold prices are unlikely to decline significantly in the near term, barring a substantial improvement in economic stability that might redirect investor capital elsewhere. Schiff emphasizes that gold should not be viewed as a speculative asset. He points to central banks' strategic acquisition of gold, noting they are purchasing it for fundamental economic reasons rather than speculative purposes, and there are no signs of slowing their accumulation. Central banks increasingly turn to gold worldwide as they navigate complex geopolitical uncertainties and persistent inflationary pressures. Gold is an effective hedge against inflation, to which currency reserves and sovereign debt holdings are particularly vulnerable. With its established historical record as a store of value and safe haven asset, central banks strategically deploy gold to maintain stability, diversify reserves, and enhance their monetary autonomy in an increasingly unpredictable global economic landscape. Before diving deeper into the video, subscribe to our channel, hit the bell icon so you never miss any updates, and share it with friends and anyone who might benefit from it.
But I think, again, the trend is going to be up in the price of gold, even if the uncertainty dissipates and we have some kind of, more a clear view of what's going to happen with tariffs. So I think ultimately, these deals are going to get made in the mining sector because what's happening in the global economy is going to be good for gold because what's happening is bad for the dollar. Trump wants to change the global trading system. He wants to rebalance trade so that the U.S. doesn't have these massive trade deficits. Well, that's going to mean a lower dollar. That's just what it means. And in fact, when you have Scott Bessent saying that one of the reasons that foreign countries are benefiting and they're cheating, they're undervaluing their currencies. So he wants the currencies of our trading partners to go up to level the playing field. Well, if those currencies go up, then the dollar has to go down. And so if you're a central bank and you're sitting on a lot of dollars and you know that even the US government wants those dollars to go down, well, why are you going to go down with that ship, right? You're going to want to get rid of your dollars to own something that's not going to go down. And of course, if the US is going to run smaller trade deficits, that means the world is not going to have to reinvest as large a trade surplus in US dollars, in US treasuries. And of course, if the US is going to have smaller trade deficits, the main reason for that is because the U.S. economy is in recession. We're not buying as much. That's the only way to really address it right now is if Americans reduce their consumption. Well, if Americans reduce their consumption and GDP is 70% consumer spending, we're in a recession. And what's the Fed going to do in a recession? Cut rates, making holding dollars even less attractive. And what are we probably going to do? QE. So now we're going to print even more dollars that are losing value. And so all this stuff is good for gold because it creates a more pressure on everybody who owns dollars to get rid of them. And what do you want to buy? Gold is the obvious alternative because it's not like Europe doesn't have any problems. It's not like Japan doesn't have any problems. And so all these other currencies, they're flawed too. Now, they may not be as flawed as the dollar, But why just substitute one flawed fiat currency for another? Why not just have gold, right? It doesn't have any of those flaws. And so that's what more central banks are doing. They're just buying gold. And then, nobody can sanction you. When you own gold and you have it in a vault in your own country, no other government can do anything because you own that gold, right? So they can't do to you what the US did to Putin because they were foolish enough to have a lot of US dollars and a lot of US treasuries. And that was the message we sent. If you hold a lot of US treasuries, you're a fool because you've put yourself in a vulnerable situation that we could take advantage of. My guess is that most people think that gold's going to go back down, to 1500. They never expected it to get to 3000. They thought 2000 was the top. So they have no idea why gold is going up. They just assume it's a fluke. And, I've heard now people call the gold as like a meme coin. Like, yeah, I mean, like it's, people just gambling on it when they're not gambling on it. Nobody is gambling on it. That's the point. People are gambling someplace else. They're not gambling in gold. The central banks, when they buy gold, they're not rolling the dice. They're buying it for a legitimate purpose. They know why they're buying it, and they're not going to stop.
According to Peter Schiff, gold recently retreated to $3,200 after nearly reaching the $3,500 mark just a week and a half ago. Despite this short-term volatility, precious metals have demonstrated remarkable growth over the past year, surging by approximately $1,000 from around $2,200 a year ago to their current levels. Gold reached a historic milestone on Tuesday, April 22, 2025, when it first hit $3,500 per ounce. This record price coincided with a Wall Street rally and a recovering dollar following Donald Trump's criticism of the Federal Reserve Chair. Schiff emphasizes that gold's impressive performance cannot be attributed solely to trade war concerns. He points out that the metal was already on an upward trajectory before the recent escalation in trade tensions, suggesting more fundamental economic factors are driving its appreciation. Despite occasional pullbacks, the continued strength in gold prices indicates persistent investor confidence in the metal as a store of value amid ongoing economic uncertainties and inflationary pressures that extend beyond temporary market disruptions or policy disputes. Let's get back to the interview.
I think the biggest driver for gold really has been central banks understanding that the dollar's days as the reserve currency are numbered. I mean, nobody knows exactly how large that number is, but they know that it's getting smaller every day. And central banks need to replace dollars with another monetary reserve. And the best choice is gold. And that's what's happening. You're seeing central banks accumulating more gold. They still own a very small percentage of total reserves in gold. And so they have a lot of currency reserves to divest, predominantly US dollars. I think it's mostly US dollars that central banks want to get off their books and replace with gold. And but I think eventually investors, both in retail and institutional, are going to figure out what's going on, and they're going to want to do the same thing. They're going to want to replace some of the bonds or fixed income that they have in their portfolio and put gold there instead. And so I think the investor demand is going to grow dramatically over time for gold. And I think central bank demand is going to continue to grow. And so the price, I think, has really no place to go but up. Doesn't mean it can't, go down along an upward trajectory. Like, we pulled back. We almost got to 3,500 a week and a half ago, and now we're almost down to 3,200. But I mean, if you look at where we were a year ago, today we were, maybe 2,200. So we've moved up, $1,000. So gold is clearly moving up, and it's not just because of the trade war. I mean, it was moving up before the trade war. If you look at the GDXJ, there's a lot of pretty big companies in there. I mean, for the gold space. I mean, it's not like the gold companies are small in comparison to, your typical, let's say, US Fortune 500 company. Even the seniors are pretty small market cap. But the juniors that we're overweighting in our portfolio are much smaller than the average GDXJ company. And they've gotten even less love. But, the thing is, with these stocks, you really need to accumulate your positions over time. And, if you go in a big way, you could be moving the price. So we have devoted resources to accumulating these positions. And yeah, they haven't moved up nearly as much as the big stocks that we own. And we still participate in the gains from the bigger companies. But because we have this overrating in these very small country companies, it's caused our performance to lag. But we're willing to do that, make that sacrifice for the long-term gain. Because I think once we really start to see money coming into this sector, which hasn't even happened. In fact, retail investors are still pulling money out of the sector. I mean, they've been liquidating GDX and GDXJ every day this year, basically, even as the stocks were going up, the gold stocks. So, but when the investment flows reverse, when Wall Street wakes up to what the central bankers obviously already know, and we start to see a real re-rating of the gold sector, and a lot of money that has no allocation, right, into gold starts coming into gold, a percentage of that is going to want to go to these smaller stocks. And then they're really going to move. Those stocks are going to way outperform the bigger stocks, which is why we own them now. And so we're sacrificing short-term performance because we know if we're right on what's going to happen in the long run, we're going to have huge outperformance. And if we just waited for these stocks to really move to then try to buy them, well, we couldn't get anywhere near what we own. We have good positions that we would never be able to accumulate if we had to compete with everybody else trying to buy the same stocks.
Gold's upward trajectory is driven by a combination of central bank demand and investor recognition of its value as a stable reserve asset. Despite fluctuations, the long-term trend remains bullish, fueled by the shift away from the dollar as the dominant global currency. As central banks continue to diversify their reserves and investors look for alternatives to traditional assets like bonds, gold's position as a secure store of value strengthens. Do you think gold will keep rising or is a correction coming? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.